How do we use Trendline when we're trading the markets? I think this is one of the most powerful tools to use when you're riding the trend, and I think all of us would know, I think you want to be in the same direction as the trend when you're trading. If it's an uptrend, you want to think about buying, and if it's in a downtrend, you want to think about getting out or be shorting or selling to ride the downside. Alright, so in this video, we'll be looking at the ultimate trendline trading strategy. How do you actually ride the trend of a stock, maximize it to its potential, and maybe think about getting out if there are signs of a reversal. Alright, so this is what will be covered right now. If you're keen in looking at trend trading, definitely you want to watch this video all the way to the end. Right, so let's take a look at what will be covered today in this video. So here's what we cover. Right? What is a trend line? What exactly is a trend line? Is it like a line? How many points does it touches? How do we draw it? This is what will be covered. Alright, what not to do when drawing trend lines. So I think a lot of people make a lot of mistakes in terms of drawing it. It gets really complicated. I'll show you what it means later on how to do it the right way and what not to do as well, and how to draw trend line the right way, right? And the difference between the long-term trend and also the short-term trend, what to do for each of them, right? And yeah, how do you tell if a trend has reversed using Trendline? I think this is a very powerful tool, and if you do see like a breakdown in terms of the trend line, it could potentially lead to a reversal. And if you're like holding on to a stock and if it breaks down, that's where you want to think about getting out as well. If you kind of like you're shorting it and it breaks up the trend line, that's where you can start to push higher. That's where you can start to positioning for the upside, or to catch the upside reversal. All right, we'll try to cover that as well. We'll look at a few case studies, and finally, how to time your entry using trend lines. How do we make sense of what to do, when to get in, when to buy, when to sell by using trend lines. So this is what will be covered. These six topics right over here. So make sure you watch this video all the way to the end if you want to know how to use trend line and this ultimate trend line trading strategy. Right. So if you like this video, guys, go ahead to hit the like button. All right, it will really help out the channel. Of course, smash the subscribe button as well so that you will not miss out on any videos like this. Let's go. So firstly, what is a trend line? But before I talk about that, this is exactly what most people do when they're drawing trend lines. You can see right here, there's a lot of a green line pointing up, red lines pointing down. This is what people draw in terms of trend line. So basically, what is a trend line? Basically, a trend line would be a line that is either sloping upwards or downwards that can point towards an uptrend or even a downtrend. So if it's like an uptrend, let me just draw it for you right here. So if it's an uptrend, we have this line pointing up. It's usually like green in color, and if we have like prices kind of like gently moving up, down, kind of like swing low, swing high, swing low, swing high, right over here, right? So this is what we call an uptrending stock. So each time it touches this line right here, you can see it rebounds, it rebounds, it rebounds, and it rebounds, and it rebounds, right? So anything above this upward sloping, what we call a channel support line right here, then we can say that it is pretty much an uptrend. So this is an upward sloping trend line. So this is how we do it. I mean, this is pretty much just a trend line. It connects points, right? We need at least 2 points to form a line. So the more points it is, the more touches it is to form that line, the stronger is the trend, right? So I'll show you how to draw this line in a real life chart later, all right? But basically, a uptrend would be when prices were to hold above this line. You can see that in this line right here, we are forming what we call higher lows, right? You can see higher lows. So this is the low, this is the low, this is the low. So as it moves higher, as it moves forward, all right, you can see that it forms higher low. The low goes higher and higher. So that's a good thing in terms of an uptrend. All right, so a downward sloping line right here. So this is pretty much a downward sloping, is like red in color. All right, then it can show what we call a downtrend. So a downtrend, same thing, just the opposite. We will like go like this, up, down, swing up and down, swing up and down, swing up and down, right? So it can form what we call lower highs, right? Lower highs, you can see right here, this is the first high, second high is lower, third high lower, fourth high is lower. So anything below this downward sloping, what we call a channel resistance line, then the trend is pretty much down. That's where you want to be careful. We might actually hit lower and lower unless we were to kind of like break above this line. Let's say we were to break above this line, and let me just extend this line for you. For example, let's say we have touched many times this line, we came down, and eventually we break above this downward sloping channel resistance line. That is where potentially we might see the trend reverse upwards, and it could be a good opportunity to think about getting in again right here. So let me just draw it like green in color. So that could be kind of like a direction whereby we might hit to break downward sloping channel resistance line. All right, so this is just pretty much an uptrend and a downtrend. And what does a trend line actually mean? So it's just an upward and downward sloping line. All right, and we have prices holding above it. It's a kind of like higher lows, that's an uptrend, and downtrend would be a downward sloping line. We call it a channel resistance, and with prices below it forming what we call lower highs, that is pretty much a downtrend, right? And that's how we have this red trend line. All right, it's a downward sloping red trend line, more for downtrend, and a green trend line pretty much for an uptrend. So that's a trend line. All right, so very simple, nothing complicated. The more points we have that touches the line, the better it is, right? So we want to try to draw the best fit line. All right, I know sometimes it might just like 2 points, 3 points, but the more points is it, the 5 points, 6 points, 10 points, the more it is, the better it is, the more weight we give to that specific trend line. All right, so this is pretty much a trend. So let's take a look at what most people do. You can see that this is a graph right here, and there are like so many lines, right? Red lines, green lines, up, down. And in fact, this is what most people actually do when they are drawing trend. Look at this. It's just frustrating. I mean, there's just so many lines, and how do you know what to do when there's so many lines? Does it make sense? All right, so we do not want to draw lines like this. We do want to draw like so many trend lines, and what most people do would be like to zoom in on a particular stock at this point in time, and they just try to like draw lines like this, like maybe just connecting, as I say, I mean, the red line would be to connect the highs and forming lower highs. So you can just like most people, I mean, that's correct. So you can like connect the lower highs, so you might just zoom in like this, and you will just draw like, oh, this high, and you just draw 1 point, and there's this high to another high, you draw another point, and maybe you talk about like an upward sloping higher low. So you can you might just draw another line. Oh, this is like a low and low, so you probably just draw another line here, and this is like another line here because it just went a little bit higher, and you have so many lines, right? So you don't want to do that, right? So what you want to do when you're drawing trend lines, first thing first is that you want to zoom out. You want to look at the bigger picture, or you look at the bigger picture. You want to look at the kind of like the 1 or 2 years outlook, rather than that, like 2 weeks or 1 or 2 months outlook just like this, whereby it doesn't make sense where we are in terms of the bigger frame, all right, the bigger scheme of things, right? So look at the bigger picture. You want to zoom out first, all right? So zoom out right over here. Okay, so zoom out, and once you zoom out, then you're going to draw what we call the longer term trend lines. That kind of like shows the trend in the longer term, all right, in longer term, whether it's up or down. And then we move on to zoom into the short term. That's where you can zoom in, because once you zoom in, then at least you know whether the longer term trend is up or down, and whether are we aligned with it, right? So let me just go to show you what I mean. But this is not the right way to do it, right? So we don't want so many lines. We want to go for the line that kind of like makes sense, to have the most touches, and we give a bit more weight to that line. So let me just remove all these right here. Let me just remove all these lines. You can see. Okay, let's click on this, right? So yeah, all lines removed, okay, and I think you guys know what is a trend line now. So let's go to draw what we call a trend line. Maybe you can see that it's pretty much an upward sloping, I mean, it was moving up, pretty much an uptrend, and then you kind of like turn down. So we can draw in the longer term, over the past like 1 to 2 years, an upward sloping trend line. So what you do is that you can kind of like draw the best fit line right here. You can see I think this is pretty much a trend line, and of course it's green in color. You can see it touches like about here, about 1 point. This is like pretty much low, and somewhere here 2 points, 3 points, 4, 5, and I think somewhere around here we kind of like broke down this trend line right here, and that's where I started to see a little bit of weakness and started to push down. So that is pretty much the longer term trend. So we have drawn what we call an upward sloping channel support line, right? So this is pretty much long term. So to say, right, we want to find the most touches, right? So most people draw very, very short lines all over the place, like you connect like many points, but try to go for the line that touches the most point. I think some people ask that, hey Joey, what do you think about a line? Does it touch the body? Does it touch the shadow? Or which part of the candle does it touch? I think it doesn't matter. I think we want to touch the most points. The more touches, the better. Whether is it like the body, the shadow or not. If it touches most points, we can kind of like make a minor adjustments whereby it touches the most points. So in this case, you can see right here it looks quite nice as well. So that is the longer term trend. If you want to zoom in a little bit right here, you can see that we can potentially have another line right here as well, as it started to accelerate higher. So let me just draw it for you. I think this was this period right here from May 2021 to maybe about September 2021, about 5 to 6 months. We can go to draw another line, right? Not like the few days, like 1 or 2 weeks, whereby it doesn't really make sense, but you can see this is about 5 to 6 months, and it kind of like sloped a little bit higher, and I think we can draw this line right here as well. You can see connecting the lows and forming what we call higher lows. Look at this right here. So I think this is a pretty decent line. Of course, there's only like 1, 2, 2, 3, 4 points, all right, and eventually it kind of broke down. So as it broke down here as well, that could be a sign of weakness in terms of the trend turning down as well. So of course, this line, this upward sloping line is much steeper than the longer term line. So when it kind of broke here, it could be just a change in trend in the short term. I mean, based on this 5 to 6 months period, it was like holding above, and when it break here, it could be like a change in trend in the short term. All right, not really longer term, because the longer term would be this line right here, because that's where we're looking at like a 1 or 2 years outlook, and it like had 5 targets. But in this case, it's only like 3 targets over 5 months periods, so more of a short term trend. So when we broke this line right here, you can see at this point in time, yes, that's where we could potentially see like a kind of like not really like a downwards move, but it could be some signs of weakness with the trend potentially turning down. Maybe it might even consolidate sideways as well, right? So that's pretty much how you draw a trend line. Of course, right here, so as it broke here, you can see that we found a high. All right, this is like a high. So this is like, okay, we can actually draw what we call a horizontal resistance level as well. You can see right here. So this is like a horizontal resistance level somewhere around the $2.50 mark, and we had prices touching here, push down, we attempted to touch it again and push down. So this 250 was pretty much that horizontal resistance level, all right, horizontal resistance level. So trend lines are upward and downward sloping lines, but I think the key here is to also look at what we call horizontal levels, horizontal price level, where we try to give more weight there, because that is a price level whereby, you know, if prices were to touch many times and it comes back down, that is the level whereby you want to take note, and that's where selling can actually come back again. All right, so horizontal price level is key. That's pretty much where entry and exit are happening, but trend lines are used to tell if a trend has turned, whether is it like up or down, but not really to, you know, gauge like an entry or an exit, right? Unless we, you know, see like some bullish or maybe even bearish candles happening right there. Okay, so we were pretty much in an uptrend for this counter right here, but you can see that we kind of broke several channel support line whereby, you know, the trend started to turn down. So now what happens is we can draw a downward sloping, what we call channel resistance line right here. You can see connecting the highs, and of course it's like forming lower highs, right? As I mentioned, from lower highs, the more points it touches. In this case, it's only like 2 points, so it's like 1, 2. All right, I know some of you might say that we can actually draw another line right here whereby it touches more point. That is possible as well. I think right here we can also draw another line, and you can see that this is where we kind of touches a little bit more points. You can see right here we kind of like traded lower, near it, came down as well. We went up a little bit, went up to this range, and we kind of like now it's still below this this second line. So that would be kind of like the zone. That's like kind of like the resistance zone, the channel resistance zone. If we were to hit here, that's where selling can actually come back again. Of course, this is the ultimate trend line. If we were to get back up above this level, that means it might consolidate here up and down, and eventually if we were to break up above this final channel resistance lines, that is where the trend could potentially start to turn up, right? That is where the trend could potentially turn up. But in any case, if it is to rebound a little bit, all right, and we go back up to the same spot right here, let me just put this in like black and colors, for example. Now we're like below this downward sloping first line, so it might actually go up again, but then we might near this and might start to come back down again, consolidate, and it might hit lower again. Does it make sense? All right, so that's where we have like an area. So it's not really like a line, because sometimes it's really nice. Of course, we want it to be like really beautiful, really nice. There's one line and that's all you got. And of course, sometimes it might happen, sometimes it might not. Sometimes we do get an area whereby we just get that area whereby if sellers were to hit, if prices were to hit there, selling actually happen in that area, that zone, all right, that downward sloping zone, you know, and that's what we see right here. Okay, so that is a channel resistance line. If prices were to be below this line, all right, then I would say a little bit more down in the short term. If it does, you know, hit even below this line, then yeah, I think we are even more weaker. But if we do get above this line, yeah, that's where we can potentially hit up a little bit. But that's where selling can actually come back again to push prices lower. So you can see that we are forming what we call lower highs and also lower lows. The key is lower lows. You can see that this is like the low, when lower, swing lower, lower, all right, lower here, lower, all right, and eventually this is low, so the next low might be even lower, all right, might be even lower. So as we go lower and lower, you can see that It's pretty much in a downtrend, all right, and if we were to break a certain low, that's where we can push even lower to find a new low before we see like a rebound again, right? So this is how we draw like a trend line, all right? We want to connect the more points. We try to look at another example whereby we connect more points, but the more touches we have, the better it is. Here's another case study whereby we have this stock kind of like moving in a downtrend, all right, for quite a while. So we can draw a downward sloping trend line as well. This is what we call a channel resistance line. So try to get the best fit line, the line that touches the most point, right? So you don't want it like to cut so many. In this case, you can see that if we do it like this, it kind of like, prices went above, came back down, went above, came back down. So not really the best fit line. Does it make sense? So we want to have the best fit line that touches the highest point, the most touches it is, the better it is. Doesn't matter whether it's the body or the wick or the shadow. Doesn't matter. We try to get the points, the line that touches the most. So you can kind of like shift it up a little bit. You can see that if we shift it up, that's where it kind of looks a little bit nicer right here, almost right here. Yeah, you can see this point as well. Maybe we can kind of like tighten it a bit right here. Maybe shift this up a little bit right here. Yeah, I think that would be quite a decent line as well. Right over here, does it make sense? All right, look at it. Right? So of course here we didn't really touch it, but in this case right here, you can see we touch it about like one time. We neared it 1, 2, 3, 4. All right, neared it 5, 6 times, and of course right over here we did see kind of like a break above that channel resistance line, kind of like pushing to kind of like a sideways consolidation and even potentially an upwards move. So that's how we draw this line. Of course, just based on one line, all right, this is like a channel resistance line. Of course, in a downtrend, we want to look at this line. If it goes above, then that's a good thing to take note, and that's where we can position ourselves to ride the uptrend. All right, so we were in a downtrend, all right. Of course, when we broke this like channel resistance line, this red line sloping down, as I say, it could potentially lead to a reversal, all right, reversal back up. But doesn't mean if like it breaks this line, means the next day or over the next 1-2 months you just push up and up like nobody business. That's not how it works. Sometimes it might just consolidate sideways, and we might see some good movement, the moving averages or the trend slowly turning up again. It might take a few months, but it will not usually happening like almost like 1 day or 2 days, right? You might just consolidate for a while, and sometimes you might consolidate and even push even lower, right? That's how it works in the market. Okay, Ken? So in this case, you can see that we started to see a little bit of a sideways consolidation after this downtrend. We start to see a little bit of sideways consolidation, so we can actually draw what we call a horizontal resistance line as well, right? So that is key, right? So as we break lower right here, this was like a support, horizontal support. We broke this level, I think this like about $6. We went down and we were pretty much consolidating as well. This is like a downwards consolidation, but it started to move a little bit sideways, and as we broke this channel resistance line here, so it was like pretty much moving sideways from this level up and down, right? So a bit of a sideways movement, and eventually look at this right here. I think the key here is that if we were to break any key support and resistance line, that is key as well. That can give us quite a good indication of any trend beginning to happen, not just the upward and downward sloping trend lines, but I think we're going to look at horizontal support and resistance lines as well. So I'll cover this in another video, but right now let's just focus on the upward sloping channel support line. Okay, so let me just go to draw another line right now, and you can see that we started to push up after breaking this level. So this like $6 was like the support. We broke down, consolidated below for like a year, and it went above, and that's where the uptrend really started. So right now you can draw another line. I think that would be an upward sloping channel support line. Does it make sense? So right over here you can see that this is pretty much an upward sloping channel support line. So let me just put it in green in color. All right, green in color. Okay, let me just remove this right now. Let's just remove this so it's a bit clearer. Remove this, and we have turned from like a bit of a downtrend to a sideways consolidation to now a bit of an uptrend after breaking this like $6 or $5 resistance level. All right, so we kind of like draw this line right here. This is an upward sloping channel support line over like 1 year plus. This is where we have been holding above. All right, so you can see it started to push up a little bit, and the uptrend kind of like accelerated a bit more. And of course now what happens is we can draw another line, all right, a little bit tighter, a little bit closer in the short term right here. That could be a line as well. Of course, there's only like 1 or 2 or 3 points. All right, it still hasn't really played out yet. We want more points to touch. As I say, the more points it touches, the better it is. We might actually start to consolidate here, up, down, above this line. All right, and of course, if we do stay above, that is a good thing in the short term. All right, but this would be the longer term line that we have formed over the past 1 to 2 years, right? Over the past 1 to 2 years, this would be a slightly steeper line because the uptrend has accelerated in terms of the lows. We kind of like did not dip back to the previous low. We kind of like just dipped down a little bit, and buyers started to come out to defend prices and push prices back up. So that's where we got a slightly steeper line that shows that the uptrend is like accelerating higher and faster. All right, and yeah, so anything above this line, that could be a good thing as well in the short term. Okay, so how do we time our entry and exit using trend lines? So as I mentioned just now, when we draw these trend lines, it is pretty much to gauge like the longer term trend or even the shorter term trend, but not really like to gauge any entry or exit. Like if it nears that line, we think about buying. If it nears it again, we think about buying, and then if it touches the upper line again, we sell it. Not really the case, right? It's just mainly to tell the trend, all right? And how do we time our entry and exit? We would use what we call the horizontal support and resistance levels. So let me just show you what I mean. So in this case, you can see that we are pretty much in an uptrend. We have this line here, this line here. So let me just go to remove this line so it's a bit cleaner. All right, it's a little bit cleaner. And now we can go to draw what we call a horizontal support and resistance lines, which is where we want to time our entry mostly at, right? So in this case, you can see that this $20. So in this case, this stock was like moving up, or we touched, we came down here. So a little bit of resistance at this level here, and eventually, of course, we broke above. This line started to push up, and this resistance at that $20, this $20 psychological resistance would now become like a new support level. So this is where we got this little zone right here, which could become like a good entry if we were to approach this zone, especially if the trend is in an upwards direction. Does it make sense? All right, so we want to be in the upwards direction, and if it does hit to this level here, that's where we could see kind of like a rebound from this level. For example, let me just draw it for you. We might actually trade lower, right? Might consolidate, might hit lower, might rebound from here and hit to this zone again and start to consolidate here. But this is pretty much the range whereby we can see some good bargain hunting happening again in an uptrend. So in an uptrend, this is like what we call the buy zone. All right, so this $20 has turned from a resistance to a support, and anything above $20, if it nears that, and of course if we do see some good bullish candles, so we want to see a few things happening, right? Not just like if it nears the line and then you just start to buy, not really. So if it nears that line, that's a good thing, but if we see like a horizontal support level at that line, that buyers that can start to come back again, that would be an added thing. That's like a bonus. And of course, the next thing, the third thing we're going to look at would be if we do see another like bullish candlestick, something like what we call a hammer, right? Or like a bullish engulfing pattern, like some good bullish bar. Like look at this bar right here. This is something like what we call a bullish piercing pattern right here, whereby kind of like when below the $20, we got the green bar whereby it opens lower, went all the way high up, and it closes like kind of like above the halfway mark of the previous day. So that can mean some bullishness whereby buyers are out to defend this psychological new support level at $20. So we see this bar right here again, or like a doji. These are all like what we call reversal candles. That's where we can potentially see a rebound all the way back up towards the resistance, maybe about the $32, which is where selling might actually come back again. All right, so just take note, like trend lines are pretty much what we use to tell the trend in the short term, in the longer term, but not really used like for entry and exit. What we want to do is that as it approaches that trend line, for example, let me just show you again. Right here, we have this upward sloping channel support line, and if we do see like prices moving up and down, forming what we call higher lows right here in this upward sloping channel support line, 1, 2, high, low. All right, so as it touches this support level, I think some of you might say that, hey, as it touches, since it's rebounded like so many times, like 1 or 2 or 3, 4, so now we come back again and touch the 5th time, why not just buy over here? All right, so that's not what we do. I mean, that can potentially happen. We can actually rebound again as we head towards the upward sloping line, but the point here is that we don't want to just use this line just because we near it and we think about just getting in. We want to see what we call a little bit of consolidation here. That might be a little consolidation. We might see like kind of like a little bit of consolidation here as a horizontal support and resistance line that can be drawn right here. Okay, and this would be like something like a support. All right, so as it consolidates here, so normally it doesn't look like that nice, right? So normally as we hit to that line, we might start to see a little bit of consolidation here, and if we were to break above that little temporary resistance level, that's where the upside can happen again, right, for this longer term uptrend. Alright, does it make sense? Alright, so that's what we're going to do. We don't want to just look at the trend line and if it hits to there, we just think about buying because it's reported many times, doesn't mean it will rebound again. It will be a bit better, it will be a bit more positive. I mean, we'll look at the confluence or other factors in terms of the candlestick, in terms of the horizontal support and resistance levels. I think that will be much better in terms of the upside reward, whereby we can see the rebound happening if all these factors play a part, pointing to a right upwards direction. So yes guys, we have come to the end of this video. Just a very quick video to show you what is a trend line, what not to do when you're drawing a trend line, and of course how to draw it the right way. You want to get the most touches. As I say, the most touches we have to form the line, the better it is. So sometimes a line would draw really nicely. We have 5 or 6 points touching just one line, and most times we might just have an area whereby, you know, there are 2 lines, there's a little zone as it hits to the level, that's where selling can actually happen again, like we covered. Or maybe an upward sloping channel support line. There might be an area, it can be an area as well, right? But this area consists of zones, right? Zones whereby if it hits to that level, many points touches it, that's where we are still pretty much an uptrend above that area, that zone, right? The upward sloping zone. Alright, so yeah, we look at the difference between the long-term trend and short-term trend. So yeah, we're going to zoom out, as I mentioned, we're going to zoom out to look at the big picture first over like 2 years, 1 year plus, and then we zoom in to look at the short-term trend just by drawing slightly shorter channel support or channel resistance lines to kind of gauge the short-term trend. So if we do break any lines, right, in the long term, if we break the line, then that's where it might be a change in trend in the longer term, or in the shorter term as well. If we to break that line, the shorter term, maybe the 5 months, 3 months, 6 months kind of the outlook line, that's where it could be a change in trend in the shorter term as well, right? So we tend not to draw lines which is just like a few days or less than a week or 2 weeks because it doesn't really make any sense, because there's not much days to show the trend. It can be a bit too short, so we look at least 3 to 6 months for the short term, and for the longer term it can be like 1 year to up to 2 years as well. Alright, so I think you now know how to tell if the trend is reversed just by using trend lines, and of course how to time entry using trend lines. So as I say, most of the time when we draw these lines, it's more or less to guide us on the trend and not really to just to teach us whether to get in and get out at that point in time where it touches the line or not to. But we want to dive a little bit deeper after drawing the lines, whereby we draw what we call the horizontal support and resistance line. So the trend line is mainly to guide us to gauge the trend in the long term, in the short term, and our entry and exit would pretty much be where the horizontal support and resistance line is, right? Whereby it can give kind of like a better entry in terms of the upside reward to risk. And of course, if we do see other factors like the candlestick and all that coming into play as well, pointing to the right direction, I think all these will add up to a positive reward to risk ratio for that specific trade setup. Alright, so I hope you like this video, guys. If you have learned something, I would appreciate if you can give me a thumbs up. It will definitely help out the channel. Of course, smash the subscribe button as well, alright, and you will not miss out on any videos like this. Let me know what's your biggest takeaway for this video in terms of trend line trading strategy. Thank you so much for watching. Let me know in the comments below what's your biggest takeaway, and I look forward to see you in the next video. Joey here. Take care.